Yeah, what I love talking about with you is that actually you sound like you're a bull and you are a Tesla bull, but you're actually not an Uber bull because you
No, no,
said
they hate
that
me for this. Like the hardcore people, they hate me.
right, right, which is funny because you're actually reserved because you just told me that your 5-year target for Tesla is 1400, and that is a let's assume we're at 300 right now. That's like a 5x,
It's a
and
430% upside for
which
5 years.
which is hilarious, which is great. But it's funny that like many of us
You
think
know, on
you're
that
being a little bit
list, you've seen
conservative.
that list on Twitter of the
Yeah,
price
yeah,
targets.
yeah,
I'm
I'm in
one of the
there.
less
Yeah,
ones. Yeah, I'm
yeah,
one of the less ones. But
one of the
yeah,
lower ones, which is
yeah,
funny, which is great because you're very careful, you're very conservative, and so I just want to set the stage because people might think that you're very bullish, and yet you do say bullish things like you're saying right now. You even in that lens, you still see Tesla being a great investment this year and next year, and of course ongoing. But show me your discounted cash flow approach because I do want to see how you broke it down. This is a spreadsheet that you've established, and I want to see how you're thinking about things. So I'm going to share this screen that you've shared with me, and you walk me through this whole thing.
yeah. So this is coming from Stock MVP. This is my own platform, which I helped to create. This is kind of a
Yeah.
summary of the assumptions I use for my DCF model. So it's easier to look at the screen rather than an Excel spreadsheet. So
Okay.
basically, just to talk about your point here, and I think it is important. I am a bull. In fact, it's kind of funny because I'm what you would call a moderate, pragmatic bull. I'm being hated by both sides. The people who are like
Sure.
absolutely, there's a lot of hate towards Tesla. It's like, oh, you're a fluffer. You're like, la 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 la, and all that stuff. And the
Right.
people on the other side, like, I love Warren, but Warren like has like he
Right.
says, oh, your target prices are ridiculously low. You don't understand, etc. And I love these discussions with him, right? But it's kind of funny. But to me, the idea of investing is very simple, Herbert. I look at what's probable than what's possible. So for me, I look at what the company shows me today, and I look at the absolute worst case, and I say,
Mm.
okay, what am I going to make worst case of this, right? And then from that point on, whatever I make above that worst
Right.
case scenario, it's a bonus. I don't
Mm.
want to be surprised and caught blindsided. So for me, I'm not going to represent to myself, oh, obviously I think Tesla can hit way higher than this, but
Mm.
I'm not going to show that and represent that as my position because I'd like to be wrong on the downside than wrong on the upside.
Okay.
So
Yeah. Yeah.
to
Fair.
this date, with all the criticisms towards Elon, right? He's late on his time, sure, but there's a good reason he's late on this on the things he on his timelines. And I had it happen to me before. What do you rather be, late on your timeline or push out something that's half baked and isn't ready? So you can take a page out of Boeing's book. What happens when you push out a pre-ready plane,
Yeah.
like a 787, right? That's all story. Like, so he's not gonna push out something that's not 100% perfect. And until it's 100% perfect, it's not coming out. And you all can you can drink a glass of water and just relax. So it's later than we promised. Whatever, right? The FSD. Oh, you promised. Well, sure, whoop-de-doo. I mean, it's gonna be out when it's 100% ready. He doesn't push out half-baked stuff, and I respect him for that. And with all the respect to Dan O'Dowd and his crowd of haters, I mean, it's already pretty good, but I mean, it's still in beta. So the idea is for me is it's kind of this Eastern European approach. I
Mhm.
look at the worst possible outcome. That's the Russian side of me. It's like
Right.
I'm gonna look at it as like
Gotcha.
the most bear case possible,
Yeah.
and then I'm gonna be surprised to the upside. So as far as my model, like
And
that's the
you're a
summary of the
quant.
model.
You're a quant too. You want to
I
calculate things, and you want to.
I want to, yeah, I want to see the numbers exactly. I
Yeah.
want to see the numbers. I don't want to assume like there's no way. Like, I don't know what the margins are going to be. Fine, like what's the final margins of the FSD is going to be like? What's the penetration is going to be like? I don't know what's the Tesla bot's going to be like. I don't understand fully still yet the insurance business, how it's going to look like.
Well, the
Um,
MBA term for it is nutty.
yeah,
The margins will be nutty.
I think like FSD is going to be 80% gross margin, which
Yeah.
nobody has in the auto industry. No, that alone excludes Teslas from auto manufacturer definition. Like nobody has 80%. Tesla is a SaaS business with energy, robotics, AI, and yes, it one of the applications of their technology is vehicles. Sure, that's the first one they pushed out to generate cash flow. But I mean, I've said it earlier today. It's Tesla Energy is so misunderstood. But let's talk about it later. Let's talk about the model first.
Okay.
So this
That's good.
model has nothing of these things. The only thing it has, this model, the only thing it has from the energy side is just the mega pack because it's
Mhm.
selling, so it's generating cash flow. It doesn't have the Cybertruck yet. It doesn't have the Model 2, whatever you want to call it, the $25,000 car. It has what we have in the market right now, a very careful assumption of FSD, beginning of FSD penetration, et cetera, et cetera. So basically a very careful model. As you can see here, it's a 5-year target. We have the conservative, the middle ground, and the optimistic side of things. Bear case for me here, the conservative side, the 5-year. This is essentially if everything goes to hell, where Tesla is going to be in 5 years. If every
Mhm.
single assumption I have about this company goes foo-foo, and this becomes a goofy stock, and something like Elon Musk leaving the company, something insane
Mhm.
happens. So the absolute bear case for this company is going to be 446. So in my opinion, right, when I look at this, I say I like that floor because at that floor, at the worst, I'm pretty much on par with the S&P 500, right? So if I
Mhm.
just put my money in
Nice.
index fund, I'm going to make 50%, right?
Nice.
So my floor is pretty much the index. So I'm
I
I'm
love
I'm feeling
this.
comfortable with that. Yeah.
Love this.
So
Love this so
yeah,
much. Yeah.
yeah, the middle ground I think is where you have a little bit more bullish assumptions, but if you look at the optimistic side of things, it's not that optimistic because the only thing I've assumed in my optimistic model is 50% growth, which they got today. And they've reiterated multiple times on the guidance. They delivered 50% growth. And as they come out with the Cybertruck and they come out with the Model 2, etc., and the FSD, things that are already lined up, that 50% is going to hold up on the revenue growth. That's the most difficult part of this model is the growth. I think 50% they'll do easily with all these new stuff. We're talking about revenue growth,
Nice.
right?
That's the
Net income
difference between
profit.
you and Gary Black, right? Because Gary does not assume that it's going to be 50% growth.
Yeah, but look, I'm not Gary Black, and Gary Black isn't me, and I love Gary Black. But my assumption is something that's based on my own world.
Okay.
In my world, right? When I'm looking at a new SaaS product, look, let's pause this for a second. What is the best category to be in the United States as an auto manufacturer? It's pickup trucks. It's the best category, best margins. You make the most amount of money. It's an absolutely beast of a category. So Tesla is generating right now 50% growth on an annual basis without a truck. Now the truck is there. It's out in the year. So okay, what's the best margins on a 4-door sedan, right? That $25,000 to $30,000 car. They don't have it yet. So as it stands right now, Tesla is doing a 50% growth without a truck, without a 4-door sedan proper. Like the Model 3 is more of a premium sedan, right? So imagine, and then you add a SaaS product, which is the FSD. Just these three things alone give you 50% growth a year if you start factoring them in from 24, 25, 26, 28 for the next 5 years. So again, I definitely see a 50% growth as something I put it here as optimistic, but I would say it's cautious optimistic. If you
I
go
love it.
down and you,
Yeah.
you, you look through the model, net income margin is 8 to 12%. It's reasonable. We can go to PE. PE is pretty much what it's at today. Conservative, it's 80. It's trading at 80
Mhm.
right now. 100, it's not out of the realm of possibility for a company that's going to dominate like crazy. Discount rates right here, as you can see, are 14 and 12. So the reason you see that difference in the discount rates, and I'm going to explain that in a second. So based on my weighted average cost of capital for Tesla right now, it should be discounted at 14%. Okay. So just to explain to people who are not from finance, and I'm sure you know this, right? But the idea here is the higher the discount percentage is, the less the valuation becomes, right? The more discount you have, the less future money is worth today, right? So if you look at Tesla today and you do a weighted average cost of capital calculation, right? You look at the structure of the cost of equity, you get 14%, but that's based on the 3.9% risk-free rate, which is going to come down as rates will come down over the next 5 years. That's a fact. So you have to adjust for that. So even my conservative approach is uber conservative. Like it
Mhm.
assumes 14% discount for every single year for the next 5 years. It's not gonna happen. If anything,
Mhm.
this should have been 12 and 10. Like if I was honestly like super honest with myself, I would put 12 and 10. But I like to be like super, super hard on my companies that I evaluate. So with 12% optimistic, I would call it it's going to be very hard to say that it's not going to be you shouldn't be discounting at 10%. And look, as company becomes, as Tesla becomes better, the cost of capital becomes cheaper because more people are willing to give it more money, et cetera, et cetera, et cetera. So there's a place to assume a lower discount rate. But hey, the 5-year optimistic, that's 1420. And by the way, that's an accident. Somebody noticed in my community it's 1420, and I was like, I didn't even notice when I was doing my model. It's an accident. So it says 1420. That's an
Yeah,
accidental number. I don't know.
sure.
I don't know what it says. And also on the apps it says 430. It was almost 420. I think it's going to be very hard for Tesla to go under that within the next 5 years. I said this earlier today. I'm going to repeat it today. Somebody asked me, "Hey, Tom, is it smart to invest in Tesla right now after
Mhm.
their crazy run and all that stuff?" I said, "Look, it all depends on your horizon, right? Do you have a 10-year horizon on this stock? If you've got a 10-year horizon on Tesla, the chances of you not making money over the course of the next 10 years are zero. If you have the patience to put the money and wait for 10 years, there's no there's like it's death, taxes, and Tesla. There's three certainties in life. So for the next 10 years, there's only three things certain. That's there's no if the only question is, do you have the patience and are you going to need the money? Because sometimes people put in money in the stock and shit happens. Health, God forbid, or trouble, financial issues, right? But if you can afford to stay in it for 10 years and not need the money, then 10 years,
Mhm.
it's your insurance policy. I mean, in 10 years, Tesla is definitely not going to be trading at $300 per share unless there's going to be a split.